Hi, my name is Nurhanifah Hamisha binti Muhammad Afizi. My metric number is A22800398. Today I want to continue my part is introduction. Analysis money and investment for a firm to aid its decision making is known as financial management. Ratio, equity, and debt are the main topic of financial management. This report primary goal is to be ready for radio analysis and a business nature study of the two companies. Next, a financial analysis something referred to as a definition of a validity, stability, solidity, and profitability of a venture of enterprise. For the purpose of counting and doing financial radio analysis, our group have selected FNN and -D. Next, about the FNN, founded in 1883, is a major player in Asia Pacific publicity, real estate, and food and beverage sector. -D and MIG was established in Petaling Jaya, Selangor in 1963, and for the past 16 years it has adapted to meet customer evolving nature needs.
Hi, my name is Muhammad Akib bin Wabuddin. My metric number is A228053. So today I'm going to talk about business nature. First of all is Dutch Lady. Dutch Lady is established in Malaysia in 1963. It is a subsidiary of Royal Friesland Campina, one of the world's largest dairy cooperative based in Netherlands. Dutch Lady is renowned for its wide range of dairy products, including milk, yogurt, and infant formula, catering to the national needs of Malaysians. Over the years, Dutch Lady has built a strong brand presence with a commitment of quality, nutrition, and innovation, becoming a trusted name in Malaysian household. Second, Fraser and Neef (FNN). It is a prominent conglomerate founded in Singapore in 1883. Initially a carbonated soft drink manufacturer, FNN has diversified into the food and beverage publishing and real estate sector. The company's beverage brand include FNN Orange Crush and 100 Plus. FNN Real Estate Division, Fraser's Property as a developed significant project in action, Australia and Europe, with a strategic focus on innovation and expansion. FNN continues to be leader player in the Asian Pacific market. Thank you.
My name is Nuraini Zaira binti Sarah Madan Elias Bakubari. My metric number is A22A1221. I will be presenting 3.0 calculation of ratio analysis. Calculation of ratio analysis divided into two parts. First, 3.1 Dutch Lady meets Sdn Bhd. As you can see, the table shows liquidity ratio for 2021, 2022, and 2023. The table above still showing the liquidity ratio, capital structure ratio, and asset management efficiency ratio. Continue with profitability ratio for the Lady Sdn Bhd. Next is 3.2 Fraser and Neef Holdings Sdn Bhd. In this table shows liquidity ratio from 2021, 2022, and 2023 for Fraser and Neef Holdings Sdn Bhd. Last but not least is capital structure ratios, asset management efficiency ratios, and profitability ratios. In this table is profitability ratios for Fraser and Neef Holdings Sdn Bhd.
Assalamualaikum, my name is Qartaini binti Muhammad Aris. My number metric is A22800777. The current ratio is a liquidity ratio, assesses a company's capacity to meet short-term commitments, such as those due within a year. It's explained to investor analysis how a firm might use a present assets to pay off a current obligation and liability. The asset test ratio, commonly known as a QUID ratio, is a liquidity ratio. This ratio assesses a company's ability to collect and convert receivable into cash on schedule and to sell inventories without significant delay. The debt ratio is stated as a debt cumulative or percentage and represent the proportion of a company's assets that are financed through borrowing or debt finance. The debt ratio is stated as a debt cumulative and percentage as represents or the proportion of company's assets that are financed through borrowing or debt finance. High ratio suggests that a company is at a danger of defaulting on this debt is interest rate and expectedly rise. The total asset turnover ratio, also known as the asset turnover ratio, assesses the effectiveness of a company investment in the total assets in the generating. A high ratio suggests that the company uses its asset more efficiently to create revenue than competitors with a lower. The fixed asset turnover ratio assesses the company's effectiveness in generating revenues from its fixed assets, which include property, plant, and equipment. The reason for changes in the fixed asset turnover ratio is operational efficiency. The fixed asset turnover ratio can be influenced by the firm's operational efficiency. The group profit margin demonstrates how effective the firm management handle its cost in order to make profit. Analysts use gross profit margin to measure a company's financial health by estimating the amount of the money left over the product sale after subtracting the cost of goods sold (COGS), which is generally stated as a percentage of the total sales. The reason for the shift in the gross profit margin ratio includes changes in pricing strategy. Operating profit margin is a profitability or performance ratio that shows how profit is made on each dollar of sales after subtracting cost of goods sold and operating expenditures.
Assalamualaikum, my name is Naswada Mazhar and my metric number is 822807090. I will continue by horizontal trend. The current ratio is a liquidity ratio that measures the company's ability to pay short-term obligation or payable with 1 year. From the graph, we can see the current ratio for 2021 is 2.96 times and for 2022 is 2.68 times. Also for 2023 is 2.65 times. This acid test ratio measures a company's ability to collect and convert its receivable into cash in a timely manner, and inventory can be sold without delay. From the data, FNN shows a slight decrease in the acid test ratio of 1.68 times to 1.56 times in 2 years, which is 2021 and 2022. We choose as the measurement year. However, in 2023, it increased to 2.05 times. Okay, for the receivable, this receivable turnover ratio measures how efficiently a company collects account receivable or revenue. We can see the volatility ratio in 2021 is 7.57 times, while in 2022 it drops to 5.16 times. But in 2023, it increased a little more to 7.01 times. Okay, the inventory turnover ratio. The inventory turnover ratio is an efficiency ratio that measures the company efficiency in controlling or managing inventory. The graph above shows that the ratio increased in 2021, which is 4.45 times, and decreased in 2022 is 3.66 times, and increased 4.67 times in 2023. The average collection period is a measure of the number of days it takes a firm to collect its account receivable. We found the average collect period ratio for 2021, 2022, and 2023 to be 45 days, 70 days, and 52 days, respectively. This ratio is a measure of the average number of day or times it takes a firm to convert its inventory into sale. The data above shows the ratio of sale in day inventory DSI or uncertain, which is 8 today in 2021, while in 2022 it will increase to 99 days. However, in 2023 it drops back to 78 days. Okay, this is about working capital. Working capital commonly referred to as network capital. It's a metric used to assess a company's short-term financial stability. Network capital for FNN firms increased from RM 1108949 in 2021 to RM 1658540 in 2023. Okay, for this graph, the data above show that FNN debt ratio is becoming more stable at 22.39% in 21, 28.78% in 22, and 34.14% in 2023. For this graph, a large ratio indicates that the firm is generating income more efficiently by using its assets. As can be seen, the turnover ratio for the year 2021 is 1.14 times, 1.07 times in 2022, and 0.68 times in 2023. A financial ratio called fixed asset turnover assesses how well a business uses its fixed asset to generate sales. The data show that by 2023, the company fixed asset turnover ratio increased to 3.14 times for 3.01 times in 2021. This shows that by 2023, the company fixed assets have been used more efficiently than in 2021. Okay, for the graph, we have 6 types. A company gross profit margin. Calculate as a profit ratio, measure the amount generated from each dollar of revenue after deducting its cost of goods sold, COGS. The company gross profit margin declined statistically from 28.61% in 2021 to 26.27 in 2022 and increased again to 28.69% in 2023. So, a company profit from its core activity is measured by its operating profit margin. The corporation's operating profit margin has declined, according to FNN statistics, from 11.61% in 2021 to 10.16% in 2022 and increased again to 12.47% in 2023. So about a financial ratio called net profit margin calculates how much net income an organization earns for every dollar of revenue it receives. In 2021, 2022, and 2023, the net profit margin will be 9.57%, 8.55%, and 12.49% respectively. A profitability ratio, known as return on asset ROA, measure how well a business is using its asset to generate profit. The ROA of the company dropped from 14.02% in 2021 to 12.82% in 2022, according to the GIF statistic. Then it increased in a last year with a total of 13.21% in 2023. Next, a company profitability in relation to its shareholders' equity is measured by return on equity ROE. The FNN company ROE has declined over the past 2 years. The ROE of the business in 2021 is 10.88%. It will be 9.12% in 2022, and it will increase slightly to 10.60% in 2023. Next, a financial statistic used to determine how much leverage a firm has is the debt to equity ratio. The company debt to equity ratio increased from 28.84% in 2021 to 52.51% in 2023, according to FNN statistics. That's all for me. I will pass.
Based on the 3-year current ratio, FNN performed better as it maintained a stable and slightly improved liquidity ratio, reflecting consistent and effective management of short-term assets and liabilities. But the steady sharp decline from 1.12 times in 2022 to 0.80 times in 2023 suggests deteriorating liquidity and potential challenges in meeting short-term obligations. Based on the 3-year asset test ratio, FNM performed better as it showed stable and improved liquidity, especially the increase to 2.05 in 2023, indicating strong short-term financial health, while the steady ratio has decreased significantly from 0.59 in 2022 to 0.32 in 2023, suggesting reduced immediate liquidity and potential difficulty in meeting short-term liability without relying on inventory. Based on 3-year account receivable turnover ratio, the steady performed better as it maintained a higher overall turnover rate, notably a significant rebound to 15.30 in 2023, indicating more efficient collection of receivable and better cash flow management compared to FNN, whose turnover rate is consistently lower and show less improvement. Based on the 3-year inventory turnover ratio, the steady has a higher ratio in 2021, which is 4.56 times. FNN's ratio improved in 2023 to 4.67 times, indicating improved efficiency in managing inventory turnover compared to the steady, which experienced a slight decrease from 4.30 times in 2022 to 4.21 times in 2023. This indicate that FNN has made improvement in its inventory management practices, resulting in better utilization of its inventory resources within 3 years. Same with the graph for inventory turnover and average collecting period. Based on the 3-year sales to inventory ratio, the steady is better in 2022 with a higher number of days, 85 days, indicating faster inventory turnover, in line with financial management theory that suggests that a lower day sales to inventory ratio reflects more efficient inventory management and faster conversion of inventory to sales. However, FNN showed an improvement in 2023 with a decrease to 78 days, about 2.5 months, suggesting increased efficiency in managing inventory turnover compared to the steady relatively stable performance over 3 years. Based on the 3 years network capital ratio, FNN consistently outperformed with higher value, demonstrating stronger liquidity and financial stability than the steady. Higher working capital indicates a company's ability to cover its short-term liability with its current asset, which is important for financial health and operation continuity. Thus, FNN higher network capital over 3 years suggests better financial management and resilience than Dutch Lady. Dutch Lady performed better overall with consistently lower ratio, indicating a lower proportion of debt in its capital structure than FNN. A lower debt ratio indicates less financial risk and potentially lower interest expense, in line with financial management theory that emphasizes the importance of maintaining an optimal capital structure for long-term stability and growth. Thus, the steady lower debt ratio over the 3-year period suggests better financial and risk management than FNN.
My name is Nurul Anis Sofia binti Maulana. My number matrix is A22A1269. For 5.3, for the vertical analysis for asset management efficiency ratio, total asset turnover, Dutch Lady show a relatively stable trend over the 3-year with a slight decline. Dutch Lady consistent more than FNN because asset composition. Next is fixed asset turnover. Dash Lady maintained stable of 3 years but with a decrease from 2022 to 2023. FNN stable but not higher like Dash Lady because the factor of the replacement and maintenance of asset. For 5.4, profitability gross profit margin for Dash Lady is stable higher market than FNN because Dash Lady has a wider distribution network than FNN. Next is operating profit margin. Dash Lady surpassed FNN in operating profit margin in 2021, 2022 and 2023. FNN was higher than Dash Lady. Ratio net profit margin. Dash Lady performed better in net profit margin over the 3-year period than FNN because Dash Lady managed its expenses more effectively or generate higher income than its costs. Return on equity. Dash Lady performed better as return on equity over 3 years than FNN. Return on asset in 2021, Dash Lady outperformed FNN as 1 year return on asset because FNN using asset more efficiently to generate profit. And the last one is debt on equity. Dash Lady show better performance in debt to equity ratio over 3-year period. This suggests that Dash Lady has better control over its debt level and potential lower financial risk than FNN. Next is recommendation. First, in pasar liquidity management, focus on efficiently managing current asset to enhance liquidity, maintaining a favorable current ratio and quick ratio. Second is optimize account receivable collection. Implement strategy to streamline the collection process, shorten the average collection period and ensure prompt payment from customer. Next is enhance inventory management. Develop accurate demand forecast, establish effective inventory control system, and minimize stock out. Boost cash flow. Increase cash flow by boosting sale, expediting customer, payment, and trimming expenses. And the last one is maximize profitability. Manage cost efficiently by negotiating better price with supplier, minimizing waste, and eliminating unnecessary expenses. Explore avenue to increase revenue such as expanding sales channel, adjusting pricing strategy, and tapping into new market.
In summary, financial radio analysis is a critical tool for comparing line items in the financial statement of all combiners worldwide and for evaluating various active-related concerns including relevant radio, liquidity, profitability, and activity. Based on above the radio analysis table, we can see that Dash Lady get more profit every year with each 2021 83.29%, 2022 112.02%, 2023 116.55% compared to FNN, which is 2021 11.61%, 2022 10.16% and 2023 12.49%. FNN profit are decreasing every year while Dash Lady is on the rise. There are several suggestions for both business to increase revenue and manage their money better. The first one is control overhead costs first. Second, sell any assets that are needed. Each business has to have its own unusable asset. Both business can also afford guidelines to increase their financial account. And lastly, move to long-term debt from short-term debt.